We have some notes. Let's see here. Took some notes yesterday from the masterclass. Talked about this stat in my final hour YouTube session yesterday. 13 of the 14 past times the S&P made a new high in September. It was higher in Q4. We've had a pretty good September. The market didn't roll over. We made higher highs in September. 20 out of 22 times since 1950, Q4 has been higher highs. I still expect there to be some type of pullback, maybe to the tune of 4, 5, 6%. If we get some crazy surprise thing with a government shutdown and all sorts of weird drama, economic news wise, maybe we tap a double digit pullback. But I still think this is something that is eagerly bought on dip, and we end up getting towards highs at the end of the year, pushing into Q4 all time highs, maybe at 6,800. Maybe this market makes a miraculous run to 7,000. I was actually thinking about this. Is it possible that the NASDAQ and the S&P finish at 20+% this year? I don't know if that's ever happened. I don't know if we've ever had three back-to-back 20+% years in the indexes. Make me a little nervous for things to come, but who knows? Who knows? So talked about that yesterday. Jobs data this week. Final quarter. We're going to kick off some earnings season this week, next week with financials. Hit some year-to-date highs yesterday. Happy with that. Technical Tuesday. Let's dive into our workspaces. We closed at 6661 yesterday. I will update the indicator 6661. And that pulls the VIX data. So VIX high around 6727. VIX low around 65.94. I'm also taking note in the tracker for daily profit play. I put in a new sheet or a new tab. I'm going to track our 50, 100, and 150 ATR levels and the VIX box, and just kind of make some observations through the day, share some screenshots. So if you have daily profit play, here is the tracker. So right here. So in the tracker, I put an ATR tracker, and all I'm doing is I just started this. We talked about it last week in the master classes. I'm just going to start tracking this information and posting screenshots. So are we within the 50% ATR levels? I'm just looking if it offers some, pretty simple mechanical profits. So 50% ATR was at the money at the open, offering intraday profit. I saw like about a 2 to 250 credit trading for about 70 cents. It closed underneath the 50% ATR, like the positive 50% ATR. So that would have been a nice just way to tackle it versus our, in addition to, I guess, our standard kind of delta neutral daily profit play. But we'll keep tracking the live trades. We're on a hot little streak, 38 for 41. Not too shabby. Okay. All right. Good morning, everybody out there. Greg, good morning. John, good morning. Aggie, Cindy, Edward, Dave, what's happening? James, Dr. Barnes, Sam's in the house. Sam, did you add an E to your name since I saw you last? Or is this the same currently? I've seen that the last couple of times. Good morning, Pete. What's happening, Andy? Dr. John's here. Good morning, Sandy. And as always, good morning, Diana. Let's get into some other workspaces here. It's me. All right. So this is our daily profit play. Let's bring up a couple more. Bigger picture. My intraday gamma levels, along with my dynamic trend, my VIX scanner. 1651 on the VIX. And yes. Got one more to open up. There. Okay, my opening range breakout. Okay, so price was within the levels all day yesterday. We grabbed a nice 25% profit this morning. Crunched the numbers, 16.51 VIX. So I'll do it manually. My daily profit indicator shows roughly a 67.28 high and a 65.94 low. Let's do the math. 16.51 VIX should be just over 1%. So 1.03 from yesterday's close, 1.03. Uh, 67.30. And 1.03 to the downside. 65.95. Okay. Largest gamma levels built in for the day, 6,600. Interesting. We are down slightly. This was a 0.22 this morning watching futures. Now it's 0.10. So we might be opening close to the close from yesterday. I am wondering if today is going to be a reasonable directional day. We've got a nice little positive negative gamma. Largest gamma on the day is 6,600 or up to 6,680. Maybe considering a reverse iron condor today, reverse daily profit play today, give ourselves a little bit of direction, end of the month, end of the quarter. Maybe the market gives us some type of shenanigans, which would be good directionally. That's a pretty straightforward trade. Otherwise, obviously, if I can sell it as high as possible, let me take a screenshot of this. So 50% ATR, I'll add this into our trade tracker. So today is 9:30. 50% ATR up is 66.86. 100% ATR up is 67.12. And the 150 would be beyond the VIX box. That'd be 67.38. To the downside, 66.35. $66.09. And just outside the VIX box, 65.83. Okay. So we're not looking at a huge gap one way or the other. We can get this to recenter at the open. I'll make some notes. So that's tracked. Waterfall income. Took a nice trade yesterday. Trades are looking good. Today, ideally, I do have a waterfall income trade that I didn't roll for my managed accounts. I'm looking to see if we are below 66.40 today. I do have the waterfall trade. I've rolled it out to October 10th with the bear call spread. I rolled it out for waterfall income, the official tracker, the class. I rolled it out in my account. I rolled it out in most of my managed accounts. But there's a couple that I was unable to roll because it was asking for me to roll for a debit, which I didn't want to do. So it's still defined risk. It's like a $900 max risk, which is quarter 1%. So if I don't win the trade, that's understandable. But if we see price today below 66.40, there's a winner of $2.30. So this account, for example, right here, this was Waterfall Strategy 2 from yesterday. So Waterfall S2. This trade that expires today. Right now, if we are below, we're at 66.61. If we are falling down to 66.40 or lower, then this trade has a profit trap. I did, Aggie. Yeah, he's with he and Scott Sheridan. They're building a new platform called Lost Dog. So I just got an email from him last week. Actually, I sent him an email just to ask what's next on Tom Sosnoff's to-do list. I mean, there's still Tasty Live, there's still the whole team, but he and Scott are building another platform. So, I mean, it's interesting. Like Tom is a serial entrepreneur. I mean, he built Thinkorswim, they built Tasty, they built the network, they built the platform. Um, so they're building another platform. I'm not sure. It's an interesting name. I mean, Tasty Trade with the cherry, and now Lost Dog. I'm like, hey man, build whatever you want. But yeah, he gave me his email, so I'll be able to stay in touch with him, which is nice. I mean, I'm sure all the connections are still there. He's still a stakeholder, he's still a partner, so all that's good. Um, Interesting. Yeah, let's find out. And I'm wondering how long this becomes a project. Let's see here. Yeah, I'll find out more. Uh, Dr. John says, "Are you asking me if it's time to buy SLV?" I mean, the time to buy it was when I recommended it 2 years ago. No, I think we have to have allocations in gold and silver. I actually talked about this. I sent a client video out yesterday, and I think that what is important to think about moving forward is the allocation. I think we have to have, or at least consider, a fixed allocation to gold and silver. So I am looking at, if I have any new clients coming into my fund, about 50% equities. And that could be a mix of sectors, individual stocks, indexes. That could be trading the S&P, trading the NASDAQ, trading the Dow, trading the Russell, and any individual stocks. 50+% allocation into equities and options and whatever I want to trade in that space. Okay. I think the other spot is probably going to be closer to a 40% allocation. And I think 40% allocation is going to be gold, silver, commodities. So that allows me to sprinkle in energy, utilities, any other commodities that I think are looking good. But gold and silver, I think we have to have pretty steady allocations to. And I put 10% in Bitcoin, Ethereum. One of them, either both or one. I mean, I'm fine also having just totally Bitcoin, trading options around it with IBIT, FBTC. I think this is a pretty simple allocation for me moving forward. This is a lot easier for me to, know my core percentages. And when things are running hot, I trim that back and I try to maintain this with protection. So I can do this, with actual ownership. I can do this strictly with options. I can do this synthetically. But also, this is not 100% invested. So I'm typically using about 50 to 75% max invested. So there's always dry powder for outlier opportunities. So if it wasn't for having dry powder in 2025, I would not have bought the SPY, the Qs, the Russell, the Dow at the April lows, right? So that has helped me position for a very good run in 2025. That's what's allowed me to outperform the markets pretty well. I mean, S&P is up 15, 16%. NASDAQ's up 18, 19%, almost 20%. And I'm up close to 30% for the year with taking a fraction of that drawdown. So I kind of like this 50% allocation, 75% when I'm feeling it's the right environment, but also what's not allocated is also running with a short-term treasury mix, getting about 3 to 4%. So there's at least a bit of a kicker there. But as far as simplifying a portfolio, there's a lot of positions you can include, a lot of exposure you can include that can also be diversified. But if I were to say this is what I want my portfolio to be, there's a lot of ways to do this, right? So this is a pretty good mix, in my opinion, moving forward. Does that include options? Yes, of course. In fact, it's going to be mostly options. I'm not owning. I don't like to own equities. If I have a little bit of SPY or Q, that's fine. If I own some individual stocks, that's fine. But it's heavy options for me. Reason why is it's income based. So if I own shares of something, I'm usually adding more puts to add more exposure, selling calls to lower my cost basis, or just simply trading options for income. Right? I own shares of GLD. I own shares of SLV. I will add more puts. I will trade them synthetic to add exposure. Bitcoin, I own IBIT. I have naked puts. I have ratio spreads. I have all sorts of. I'm not doing covered calls. I think that's been part of the suppression and volatility on Bitcoin. It's a really good reflection of risk appetite. Right now, Bitcoin is down compared to all-time highs in gold and silver. Silver's not quite at the 1981 or the 2011 highs yet, or 1980 highs, not yet. But silver is now more than just an industrial metal. Silver is now being declared as a strategic metal, and I believe that gold and silver moving forward are going to be something that we're going to see them continue to appreciate. Gold is right now probably the front runner for if the world is moving away. And I'm not saying this is the death of the dollar. I'm saying that the world is clearly showing positioning where it is moving away from fiat related holdings. And so if the world is moving towards gold as something where it's like, look, if we're going to own something, let's own something that appreciates in value over time, that's not constantly debased and not printed out of thin air. So this loss of reliance on fiat and the US dollar, I mean, gold is outperforming everything this year. I'm not talking about individual stocks that have run, 100% since April lows. I'm talking about year-to-date performance. Major asset gold is beating the Nasdaq. It is beating the S&P. Silver, same thing. So I think these are percentages and allocations you have to consider moving forward. Okay, I like the spot stuff. So GLD it looks exactly like the spot price of gold. If gold is up, GLD is up. So I mean, GDX I know is up 120% for the year. Miners, cool, fine. It's also more volatile. Gold is probably going to have a 15 to 20% pullback. I'm not joking. We'll probably have a 15 to 20% pullback in gold sooner than later, just based on the bar counts and the run we've seen so far. But it also is a chance to reposition, probably rattle out some of the weak hands at the top, and hopefully scoop up some really good bargaining prices as gold continues to maybe mount some support and just stay in the game. I mean, it's hard to look out 5 or 10 years and think, is it possible that gold's up to $10,000 an ounce? Is it possible that silver's up to $80 to $100? It maybe, right? I mean, do the 1980 and 2011 highs matter in silver? Maybe they don't, right? Going from an industrial metal to a strategic metal, if silver is treated that way, and it's also kind of poor man's gold. I mean, I listened to this podcast a couple weeks ago. I shared this with all of you. I said that this reference was gold would be considered the unaffordium, where you can't own gold because it's so expensive at some point in time, and silver is the unobtainium because it's so difficult to find it and so difficult to get it and retrieve it. So scarcity on both, value on both, appreciation on both. I don't think this is a terrible mix. So, and I've seen some other, macro analysts talk about 60, 30, 10, 60, 20, 20. I mean, there's all sorts of ways to split this pie chart, whatever you want. But this allows me to play a lot inside of these percentages, and it will be heavy in options because it's far more capital efficient for you to trade in options. Okay. What else? Bodine says you were right about not holding daily profit late in the day. Track the separate bull call, bear call sides, put side. Yeah, I mean, I'm telling you, man, the gamma sensitivity in 0-day trading is 10 times bigger than it would be if you're out 30 to 60 plus days. So it's just you are either right or you're wrong in a 0-day environment. So when you're right, be right and get out early. When you're wrong, accept that you took defined risk up front, right? So Aggie, that does answer your question. Yep. For starters, do not hold gold or silver as a tool. Of course not. No, I mean, that's the point is it's not too late. I think what's crazy is you look at the prices, like, well, gold's already run 40%. I can't buy it now. Yes, you can. As an allocation, you can. But obviously, if you take a stake in gold, if you trade GLD or SLV, don't just jump into it with all of your position, right? What I would consider is if I want to get into GLD, which is the spot price of XAU, right? So we're getting overbought conditions on a daily time frame. I am telling you, I'm just kind of issuing a friendly warning here. Don't be surprised if the market pulls back. Okay, I am not joking. 15% is a 200% or a 200 EMA. I've been watching this thing since this blow off move. In fact, I thought, well, if this is going to break this wedge. Now, this was an ascending wedge. I thought we could probably blow the top off before we had a correction, but we have gone over 500 bars since we've hit this 200 moving average, which is all the way back here into 2023. So we've had a very overextended move from a timeline. So over 500 bars. The longest bar count I've seen was back in 2009, 2011. It was over 600 bars, but it was right around 600 bars, and it came right down to the 200 moving average around like 620 or 630. So it didn't take long to have a crazy correction. Now, I'm saying this because if I wanted to allocate, I would not just put a stake in gold at the highs. I would look at let's say I have, whatever, $50,000, and I'm going to allocate 10 of it to gold. Just throwing random numbers out there. So if I have 50K, allocate 20K to gold, I would take 1, 2, 3, 4 positions, and it'd be 5K each. That allows me to get, this 1, 2, 3, 4. That allows me to get my 20K allocation, or I guess if it was a 100K account, there's my 20%, right? Or 10, whatever. I'm losing myself in the numbers here. So I'll just say that I'll put in my 10% here, but I split it up. Here's 2.5, here's 2.5, and you go 2.5 down the list, and you get your allocation at a break even that you're happy with. And then, depending on how many shares that is, do you have enough to control options? Could you do some bear put spreads to have some protection, right? Do you have over 100 shares? You can sell some calls if you want to lower your cost basis. But once you establish a core position, now you nurture that. Make sense? So, gold, overbought conditions, we'll probably pull back. We should pull back to the 21 or 50 period moving average. We should probably pull back to this previous all-time high. But I'm not calling a top here in gold because, look, central banks and institutions are flooding buy trades with gold. The ETFs have run hot since Russia-Ukraine in 2022. Central banks are hoarding right now. But who's not talking about this? Retail traders, which is crazy. I mean, some of you hopefully are, paying attention and educated, and you're not just guessing. But the overall, financial advisors, I don't see them talking about gold. Hardly anybody. I think this is something that has to be like a staple allocation because, look, Bitcoin is pure speculation. Gold, speculation plus value. Silver, now that it's made it more strategic, speculation plus value. And there's scarcity in both. The reason I don't play the miners is I know the miners have been up a lot, right? The reason why is because it is incredibly capital intensive and low probability that these miners actually have projects materialize into profits. Like junior miners, I don't know how they make money. The only reason they're making money and they look good on paper is because the spot price of gold is so high. That's why they had to run this year. That's why GDX has beat the pants off of everything. Okay. I was buying this thing back in the 30s. I didn't hold it this long, but do we have to have a pullback? Probably. We are like 3 or 4 standard deviations above these moving averages. So anyway, we'll talk more about it in a second. Let's get into opening bell. All right. So we are sitting at right around the open. See if we have some big gamma levels this morning. Biggest gamma level, 6,600. I'm going to see if I can get a reverse in today. Reverse iron condor. See if we get some direction. I just want to price it out first. So September 30th, do we have a directional day? 45 and 50 and a 60, 55. Come on, man. We've got a plus or minus 22 on the day, and I'm going 20 wide. It's only offering me 570, 580. That's a terrible fill. Let's go up here a little bit. So if I went 20 wide, 5, this is why I haven't taken a reverse iron condor for a while, because these fills are so bad. So never mind. Let's see. Could I sell some of the larger gamma levels? Let's look at the mechanics here. So 66, 80, and 85. Let's go 90, 95 for, let's see if this fills for $1. So this is 60 cents. I'm going to go 90 to 95 for $1. This will be a pending order. Okay, 90 to 95, and then 6,700 to 05 for $1. Couple pending orders there. Okay, so I'll get these in as pending orders. On the put side, I mean, this is a large level. Let me see what's filling up here in real time on my dynamic trend software. I'm just seeing how wide the gammas are, Mark. You know, I mean, we're right here at 66.55. I mean, running up to 80 or 6,700 retest all-time highs. Running, I mean, this is kind of the main spot here. If we find this center point, this is the flip from going positive to negative gamma. So if we get below this level, you know, there's not much stopping us down to 6,600. So I think it's open space to kind of bounce around here, find highs at 80 or drop down to 66. Okay. So that's what I'm looking for as far as direction. I don't I like the inverse iron condor. I just don't love the trade is offering like a garbage fill. I mean, this is plus or minus 22. I don't know. I'm a little skeptical that if it only stays like a 20-point move or open to close, that's obviously a very lackluster Q4 or Q3 end. If I went, I mean, if I'm going 20 wide, it's like I should see this thing filling for like $5.90 to $6, and it's not. So that's taking on, you know, a 20 wide dead zone. I should be getting filled for more. Maybe I hate this trade, but I'm going 25 wide. That's fine. Let me just check a couple things here. So do we bounce off of, let's see. I mean, maybe I can center this thing. If we get below 40, if we get below 40 or above 60, like if I get $6 on this one, I think that would be kind of a nice little dead zone. Let's see if we get $6 on this one. So below 40 or above 60. Let me see if this one will fill. This is kind of in the guts for reverse iron condor. I'll try this one here. So $6 pending. Or I'll go one lower. So I went 40. So if I go below 35 and 55, I mean, I should not have to go 25 wide in this thing, but I can also take a decent chunk of credit here. So let's try it. Let's try 620. 620 is not filling. I should be able to get filled for like 610. This at least reduces a little bit of the risk. All right, so I am in at 615. I'll post this. This is official. Daily profit play Telegram getting posted right here. So I'm going 25 wide on a reverse iron condor. New trade. Today is the 30th. And that one just got filled. So the 35 by 40. 66.60. 66.55 for $6.15. So $1.15 max profit. 3.85 max risk. This is a reverse daily profit play. I want price to be less than 6635 or greater than 6660 with today's end of month and end of quarter direction. Okay, so that trades in. Okay, so we'll see what happens on that one. So directionally, what I need price to do is get below 6635. I'm just going to put a box here. If I can keep it below 35. So below 35 and 60. So that's a pretty big dead zone. And I don't love that. I don't particularly love that. But I'm hoping that the market isn't just contained today. If we end up coming, down and working our way higher, I mean, 6,700, if we're going to try to revisit all-time highs, it's way up here. If we're going to fall and fill some, negative gamma levels, then we get down to 6,600. I'm just hoping we get a directional day. Okay, how many? So you went 20 wide there, Viva, for 595. That's good. That's not bad. That's not bad. Okay, so I'm going to label this as like a dead zone box. So this is a dead zone box. I don't need to reiterate the box is already yellow, so that would be redundant. So let's go dead zone. I want price to be outside of this. Okay, so are we considering? I mean, and I might look at some bull put spreads if we come down to like the 100. I mean, if we bounce, let's say we get down to like the low 66s, I might take a bull put spread. Let me see if we can go maybe a bounce here. But I'm pretty happy with the trade. I mean, 615. I know it's 20 to 25 wide, but if we actually have some directional movement on the day, then we should be good. That reverse under condor typically is something we can manage later in the day, like noon or 1 o'clock in the afternoon. Please check your trade. What's my trade? 67. I didn't take that trade, John. They're all 66s. 66.35 by 40 bear call, 66.60 by 55 bull put. Yeah, they're correct. It's an in the money bear call spread, in the money bull put spread. The trade looks like this. So I have profit, I have a dead zone, I have profit. Oops. I have profit, I have a dead zone, I have profit. So if price moves up or down, this is my risk. And this break-even point is 6,660. So if we're greater than that, we make money. We get paid here. And also, if we are less than 6,635, we get paid. So I can make money on the upside or downside of this trade. So I get paid here. If price falls, I get paid here if price rallies. And my dead zone is later in the day. If I think price is not looking great, then I can manage my risk. But at least it's capped. I can only lose $3.85. Okay. I just like that being versus, going 25 or 30 wide for an iron condor and then having price move a little bit more volatile for the end of the month, end of the quarter. I was filled at 615. Yes. Yep. Double check your trade, Gil. Double check the trade. Make sure you have your sells and buys in the right spot. I'll do it again. So right now, if I did the 66.35, let me go this account here. Okay, 66.35 and 40. That's the bear call spread. That's in the money. And then a 60 by 55 in the money. Right now it's showing a 620 to 625 credit. So it should be a $6 plus credit. $5 is the risk minus the credit. I'm pulling in 625. So I mean, if I pulled in 615, that's where I got filled. So that means that it's an excess credit. So the way this trade works is here is my risk and dead zone. Okay. So if price is in here, so if it's 66.60 or above, I get paid. 66.35 or below, I get paid. If it's in between, this is my risk. So this would be $3.85 of risk. And my potential profit, nice fill, Snapper. Getting filled at 620 is good. My potential profit here would be if I've got $1.15 of profit potential. My goal is to if I'm confident that we can stay above 66.60 or below 66.35 by the end of the day, then I'll let this go to expiration. Otherwise, if I can take this thing down to, let's say, a 35-cent debit or a 25-cent debit, maybe even a 15-cent debit, I don't mind that trade. In fact, I'm probably going to set the trade at a 15-cent debit. See if I can pull a full $100 out of it. Okay, I've got a chart alarm here. Google is coming back to 240. So that is starting to look good for like a fade that gap. Profit number to close. Yeah, I mean, anything in here. If we had, realistically, even if we had like a 65-cent debit or a 55-cent debit, those are good starting points for like the more conservative, get me out of this trade quickly debits. But if you want more profit, 35 or less. So I'll add that into the alert. So a 65 debit or lower for profit. I'll assess price action and see if we can go after, let's say, like a 35-cent debit or lower. But if price seems to be really choppy for end of month, end of quarter, then if I can just sneak in, 50, 60 cents profit, I'll just take the profit. Okay. Yeah, Tail, we did. So gamma levels, it's pretty wide on the day. I mean, there's a big middle ground around 40 to 45 right in here. If we break below 45, that goes into negative gamma. There is room for this thing to fall lower. I just don't know if that's going to happen, all day today. End of the month, usually the market kind of does crazy stuff into the close. So we might see the market selling off aggressively into the close, maybe rallying at this, end of month, end of quarter, trying to finish the year or finish the quarter at the highs, which would be all the way up to 6,700. So just be like aware of that, So what I'll do for right now is SPX working, bear call spreads. I'm going to cancel these for right now. I put this trade on yesterday. It's pending. I did an October 6th, which is next Friday. I did a broke wing butterfly. It's not filled yet. I'm still going to watch this one. But if this gets filled, I'll make this an official alert for a daily profit play. I'm looking at the 6,800 pin price for next Friday. Jolt's and confident. Is Jolt's today? I thought that was on Wednesday. Or just we have ADP. Let's go this week. So today, CAD Bank Holiday, Jolt's at 10. Okay. Yeah, that's fine. Trump's on the calendar. Was he on the calendar yesterday? Yep. So Trump's on the calendar today as well around, what's it showing here, 11 a.m.? I don't know if this is about government shutdown stuff. I don't know if this is, I have no idea. The market didn't do anything yesterday. So we'll see. I'm not thrilled. I've got to go 20 to 25 wide, but I think the trade is hopefully the right play for the day. That way, if price goes up or down, we get paid. If price is doing absolutely nothing for the month and the quarter, I'd like to find that hard to believe. But one never knows. So as long as we get out of the dead zone, we'll make some profits today. That way we don't have to be, trading a direction. It's just get out of the dead zone, we'll make money. Do I still have pen? No, I'm gonna cancel this for right now. I'm gonna cancel the pending order, so I'm not looking to fade the highs or the lows, not yet. And the reason why is because sometimes the end of month and the quarter can do some silly stuff. So if we come up into, I would say I'd be more satisfied to sell if we can hit, what did I calculate for the highs today? 25 to 30. That'd be roughly this like 150% ATR. I will consider selling up here. If I can do like a 67.20, I'll do that. I'll put a couple pending orders in. So I'll do 67.20 by 25 for $1. Again, it's kind of a long shot because it's a very low delta, but if it gets filled for a buck, that's a great trade. It's pretty much at the VIX high in the 150% ATR. So I'll put in a trade for a buck. I'll put this in Telegram here in just a second. So that'll be pending at 2025 and then 30 and 35 for $1 there. Okay. And on the downside, I'll do the VIX box, which is around 65.95. So 65.95 pending here for $1 and 85 and 80 for $1. All right. So I'm going to get some fringe credit spreads going. Adding pending orders at 150% ATR levels and VIX box highs and lows. So a couple of these are sprinkled in. This is a 9/30 expiration, 67.20 dollar credit pending. And that would be the 30 and 35. Dollar credit pending. And then 65.95. 65.90. And final one here, pending order. 85 by 80. Dollar credit pending. Okay, so 4 pending orders. Okay, everybody see that in the Telegram? Daily Profit Play Telegram alerts. So 4 pending orders. They are way up here towards the 150 to the 150% ATR to the VIX box high and down to the VIX box low. So we shouldn't see price get to those levels. But if we have a run, let's say that price falls down here, there's a good chance we can get filled. Let's say before 11:30 or 12, if the market makes a directional move, there's a good chance we can get filled, and then price can stay within that kind of range for the day. Okay, so they're out there. Define risk. I mean, I'm comfortable taking that. The probability of price being beyond those levels is pretty slim. So yeah, I think we're in good shape. VIX is retreating a little bit, but we've had highs up to 17.7, down to 15 plus, and the S&P has barely budged. So it's really hard to believe that unless the VIX like screams up past 20, this market just refuses to sell off right now. But one thing that will happen by the end of today is all of those major quarterly hedges are going to be off the table. And so October is going to be a new month, and October is a new month, and there's probably a new JPM collar trade. This is all going to happen tomorrow. And yeah, I think there's going to be a new level of hedging to the call side and the put side. So we'll talk about that more tomorrow, because that's usually like the JP Morgan collar trade is generally a 10 to 20 delta for every quarter. Okay. Let's see here. Bull put spread 66.25 and 20 for $1. Okay. You got filled. So you got a 25 by 20. That's not bad. If you got filled for $1, that's pretty good. All right. So I've got a dead zone here. I'm going to see if price can get through it. We've got some pending orders on the highs and lows. See if we can just kind of get some support and resistance love. And if we just stay out of the dead zone, I don't want to see a lame end of the month. I think that if we take this trade into the end of the day, I would hope that the market gives us some type of end of month, end of quarter flows and gets us outside of this box. So what makes these trades really easy is if price is here for the morning, and then later in the day, it actually moves somewhere by 12, 1 p.m. in the afternoon. If it's, 15, 20, 30 points clear, then that's easy money. Same thing here. If it's, later in the afternoon, yeah, it's easy money. Where can we go? Well, all-time highs at 67 and a big gamma level at 6,000. I mean, I think those are realistic levels if we have some direction today. But maybe this whole thing is just, oh, well, the government shutdown. We don't know yet. And the market's just going to be lame. I hope that's not the case. I'm thinking, if anything, we're in positive gamma. So for right now, positive gamma. Seems like this like 45 and 40 handle could hold support. If we come back up and try to hit yesterday's highs, there's a gamma level of 80. I mean, that's reasonable. I'm trying to get price above 60 or 65, right? Yeah, above 60. I need price above. If we hit 80 today, there's a good chance we can keep some profit. Am I still in the waterfall trades? Yeah, I'm in all the trades, Rob. Every waterfall trade that's not closed out on the tracker, I'm in those trades. So we added up yesterday. We have like $5 and was it six? Like $6.24 a credit on some of the open positions we have. So we're looking at some pretty solid income. And we did a live session yesterday for 45 minutes. So positions are in. I like where we're at. We're trading a lot of forgiveness. Strategy one, I'm hopefully going to get some pullback levels. We can start dipping into strategy ones if the market's going to pull back at all. I want to see some pullbacks. How do you close it? So I took the trade in for a credit. So I'll show you here. So SPX, this is my daily profit play right here. One thing. So this is 25 by 30. This trade is bull call, and it's up around $315. Max profit here is about $500. So by the end of today, if we're above 66.30, I can keep $500 on that. That's a profit trap for us on waterfall income. And then we rolled out the 40 and 60 for October 10th. And if we stay below that, that's ideal. That could actually be a pretty nice trade. This is the trade I put on today. I need price to be less than 35 or greater than 60. So less than 66.35 or greater than 66.60. The way to close this trade is I pulled the trade in for a 615. Nope, you can put it all on together and close it together. So I pulled the trade in for 615 credit. What I'm going to do is put in a pending close, $5. And if I did 35, I'll do 535. That gives me 80 cents profit on the trade. The most I can make is $1.15. If I make 80 cents out of $1.15, 80 out of $1.15, that's making 70%. It's not bad. Okay, so either 535, 525, those are realistic fills as long as price is outside the dead zone. If you want to be more conservative, set this thing at like a 565, 555, and grab 50, 60 cents on the dollar. But you can put the trade on together and close it together. I'm going to put it in for a 535 close. So now if I win, I'll win 80 cents on the $1.10 max or the $1.15. So filled for 615, close it at 535. That gives me 80 cents. You good on that, Raymond? Okay. All right. A couple of key levels. I'm telling you, this is important to watch. If we get below 40, if we are less than 66.40, this market switches to negative gamma, and this is our largest liquidity level for the day. Okay. One thing that'd be very cheap for double up alerts would be a 6,600. If somehow we get there today, I mean, that does seem like a long shot. I mean, we're 40 plus cents away. It does seem like a long shot just because the plus or minus is 22, 23 points. I mean, do we get to 6,600 today? It'd be awesome if we did. It's just a low probability trade. I'm just saying it'd be very, very cheap to take this trade. If I did a put fly, I'm just going to look at it first. And let's put this thing down to 6,600. So 50 cents if I try to pin the 6,000 or 6,600. I mean, it cost me 25 to 30 cents to make $1,000, but price obviously has to fall pretty aggressively. So the question is it going to? Are we falling to 6,600 or are we going to 6,680? If we go nowhere, well, obviously there's a big dead zone. They can be whatever size you want, Chuck. I do a lot of one contract trades just because it's small risk. Small risk, always survive. Just plan on winning. It adds up. All right. Let me see. I think we're just going to hang out for right now and just soak in some direction. All right, let's pull up the calendar here. All right, let's just check some headline news. I know government shutdown stuff is popping up left and right. Let's see here. School collapses. That's awful. If Dems shut down the government, all right. Is there anything bipartisan anymore? Probably not. Why should there be? Us versus them. We're not in this together, right? Every man and woman for themselves. I don't know. Government's the worst. Anyway, let me see what's happening here. U.S. government shutdown. Let's get the details. Government may shut down at midnight. Here's what to know. All right, let's see. So we might have, and again, like this is what's silly about today's price action, right? Today's price action might be little to no direction, all pending on a government shutdown. And then October 1st to the 3rd could be just like pandemonium. So just bracing us for that. All I need price to do is get out of this dead zone, right? So this is why I'm just thinking, okay, let's give us some volatility today, end of month, end of quarter, looming government shutdown. We don't have to be brave at all. Just play the game. What else? I'm guessing that's why Trump's on the calendar. Yesterday, today, as we're trying to do some talks past this like 11th hour. There you go. And it's blame game. I think we're headed to a shutdown because Democrats won't do the right thing. There you go. Just blame them. Short-term funding agreement. I mean, we're operating at a fiscal deficit of 8%. That seems responsible, right? So potentially it's tonight. Tonight at midnight, there'd be furloughs. We'd make the labor market look even worse. We got non-farm on Friday. I also saw an article. This might be fake news. I don't know, but maybe Friday doesn't even report non-farm data. I feel like that can't be a good thing. But we will see, and we'll be here every day to trade it. So whatever happens, we'll be here. It's just frustrating to see like government's the worst. I don't care if you're Republican or Democrat. I am a trader. I'm a centrist. I don't have a bias. I just think that it's a circus. It's a mess. It's embarrassing, to be honest. But it's not political. It's just I want to trade. I don't want there to be government disruption. It just seems like we have to deal with it. Fiscal policy is front and center. It has been for the last 5 years, and it is now making the Fed almost useless. And this is also why I think the market's going to run hotter for longer until there's some type of major policy shift. So on a positive note, I think expect more melt up. I think this is still good for the pie that I talked about. Having some equity exposure, some gold and silver. Bitcoin is totally up to you. I think Bitcoin as an asymmetry type trader, I'm looking for it. Let's see here. Swap my program over to you for a week. Deanna, can we help out? New guy there in the chat. Can you send an email? Either you can email me, Chris Pulver. So Chris Pulver pub at gmail.com, or you can email support at prosperitypub.com. Yeah, send an email. I'll make sure it gets in the right hands. We'll get somebody to contact you. But it's nice. I'd love to have you in the classes. Even if the government shutdowns, it still keeps. I know that's the thing is like this. The shutdown is over. Like, I mean, it's like pennies on the dollar. We're shutting down over billions of dollars when it's like, did you see that our debt's like 37.8 trillion? I mean, and this whole idea of Doge back in early 2025 with Elon Musk and Doge and cutting government spending, he wasn't even able to save $1 trillion. It's not him. It's not Musk's fault. It's like that's how bloated and crappy the government is. It's like you can't cut anything. Everything's already like fixed. I mean, you're not going to cut military spending. You shouldn't be cutting benefits like Medicare, Medicaid, Social Security benefits. So I mean, what do? You fire a bunch of government workers. Okay, well now officially September they're considered unemployed, but there was a 6 or 7 month severance, right? Anyway, it's just all funny money. This is also why the world is moving towards gold, and Bitcoin could get a little piece of that. I just want to put this in perspective. I sent this out to my clients yesterday. The bond market is $40 trillion. Okay, if the world believes that the U.S. bond market isn't quite the safe haven that it is, $40 trillion shrinks. And if we went from 40 trillion market cap to, let's say, 35 trillion, that's $5 trillion that has to go somewhere else. That could go into gold, that can go into silver, that can go into Bitcoin, that can go into a lot of things, just not government bonds. This Genius Act in putting in stable coins. Well, all that is a synthetic way to keep buyers into the bond market. It's creative. It could be genius, like the plan says, but it also could be completely reckless, where all of a sudden we're backing speculative instruments with government bonds that if the U.S. ever defaults, I mean, who knows what that does to the markets, So point is, it's out there. Like, it's a lot of uncertainty, but that's always what trading is. Look, I've traded for a long time, even through, I would say, I was pretty certain through this year we'd have the bottom. Like March and April, the way it sold off, it's like I wasn't crazy aggressive, but I participated in scaling into those lows. The most confident that I've been in the last 20 years of trading was trading either massive positions in dollar cost averaging and currency pairs or being long post-COVID. Like I can't think of a time where I've been like confidently directional for the entire year. 2020, after we had that nasty COVID drop through March, it's February, March, April, it was like a 40 to 60 day drop. Once that was done, the only reason I bought everything I could get my hands on during COVID is because, number one, the world wasn't shutting down. Number two, everything was at like a 10-year discount. Stocks we've been waiting for discounts on, we all of a sudden had like a 10-year discount. I looked left, you've got 2008, 2009 lows being tested during COVID drops. It's like, I've got to take a stab at this. And so I just put like, $1,000 here, $1,000 here, $1,000 here, $1,000 here. And like everything was offering triple digit winners over the next like 6 to 8 months. It was insane. That was like the easiest trading. And that was the only time I can think of where it's like right now, it's like I'm cautiously bullish. I think the market is going to continue to give us really nasty, volatile spells, but it is forcing government hands. We have fiscal spending probably to the degree we've never had before, and it's the whole world is doing it. So we are cooking the markets. We are running these things hot, and we will have more bubbles and more busts and more booms. And it's the cycles. The cycles will keep happening. We've had 7+% corrections in the last 12 years. Right. And that's 20+%. We've had over 20%, or we've had over 10+% corrections in the last 10+ years. Like we've had these 5-10% corrections a lot. And I just think that the market needs them. So looking at a level like this, I think the market needs something. A 5% correction shouldn't scare anybody, right? Is the market going to be sideways here until it like rolls over into October with the looming shutdown, maybe tonight at midnight? I have no idea, right? But either this goes sideways and this catches up. If we break the floor, then we have room to drop to the 100 period and back into some support. There's still lots of support. I'm going to go on the statistics of 91% of the time, 20 out of 22 times since 1950. If we are hitting highs in September, most of the time Q4 is higher. So I just go back to this. It's like there's some data that I lean on that rhymes. 1950 to now is a pretty good tailwind to have. It's a pretty good history lesson to have on your side. If we're hitting highs through September, most likely Q4 is going to go higher. You go out 12 months after rate cut cycle, the markets are higher. You go out 12 months past a rate cut cycle, the markets are higher. If you just go out in time, the markets are probably going to be higher. What you shouldn't be worried about is how far they can go down, because if you have protection, i.e. my crash insurance masterclass, it's cheap. I would lose a couple $1,000s for the year if I'm wrong on all of my hedges. If I'm right on any of these hedges, the minimum payout is like 10 grand minimum. And I have upwards of, I've got a trade that I paid, I debit, it was a debit of $944. It could potentially pay me $44,000. So if I need insurance and protection, I have it. So if the market does something really terrible, I'll be okay. But I think we should just plan on this market's job is to go higher. What would disrupt the path? Well, we have a stall in Mag 7, which is so big, so concentrated that the market rolls over like it did in February, March. Or we have this AI hype and it pushes up to ridiculous valuations. And all of a sudden we realize all the CapEx spending isn't going to be a return on investment that everyone wants. And we're spending too much. We're not bringing enough revenue. The profit margins aren't there. And it's a bottleneck. Or we have an energy bottleneck where we don't even have what it takes to produce the data centers and run the computing power like we want to, right? And this is the race against China. I think energy efficiency-wise, China is way better than we are. But when you put the U.S. on the same path as let's focus on this, let's make this a priority, let's make this a national security issue, let's declare a national emergency, I wouldn't bet against the U.S. I mean, if you're betting against the U.S., you are betting against the world. If you want the U.S. to go down, I'm saying, just don't be bearish. It is silly to have any type of time horizon and be bearish in these markets. The fact that there is so much terrible news and terrible newsletters and terrible just headlines that's all about how scary and fearful it is. And yet all we've watched this entire year is a little pullback that was expected, right? And it got a little nasty and a little volatile. It did. But what did the market do? Found a way to catch a bottom, and it was a reflexive rally. We're going to see more of those reflexive rallies, or we're going to see time that the market just goes sideways for a while. And the difference between a passive investor that's just riding the coattails of indexing or a trader that can benefit from up, down, sideways, we will be fine. So if I can just offer a little bit of optimism and reassurance, we'll be fine. We'll figure out how to navigate these markets. But don't be scared. It's risk capital. You can trade everything with defined risk. You can have protection on positions that you own. You can trade, options to generate income up, down, or sideways. Okay. Bodine, that's correct. So if you got 620, that's a $1.20 credit. So you'd have max of 380. You're right. Correct. What would happen if there's government shutdown a week? Yeah. I mean, it wouldn't look good. I mean, again, what have I been talking about technically for the last couple of weeks? I think the market has to have a reason to pull back. We're over 100 bars overstretched in the 50-day moving average. I think having a 5 to 10% correction is not out of the ordinary. I think, in fact, after a 40+% rally or nearly a 40% rally, we need to have it. This bottom in April going up 39%. I mean, a pullback 3 to 5% shouldn't be unreasonable. In fact, I think it's a healthier pullback than just to go higher. If the market refuses to go down, then eventually when it does crack, it's going to go down a little bit nastier, because this is now going to be a major level. And just the further away we get from it, it's just going to be a deeper correction. So I would just rather see the market cooperate with a pullback first. Let's find support here. Then we can get the animal spirits for Q4, get back up the highs, and melt up into 2026. But give us that opportunity first versus just FOMO. You're never going to catch it. You're never going to catch the market. That's what feels the worst. Is you just have to chase. Chasing highs sucks. So that's why I sell a bunch of puts. All right, NVIDIA, Apple pushing higher. Let's check the heat map really quickly. Barely. I mean, I'm not seeing big green on here at all. Google's down, Meta's down, Amazon's down, Tesla's down, AVGO's down, Oracle's down. NVIDIA, Apple are flat, less than 1%. So they'd have to be, I would say if NVIDIA and Apple are up, over 1%, then sure, they could probably stabilize the markets. But all I'm noticing right now is healthcare is up. That's kind of green across the board in the sector. Large cap tech it's not awful, but I mean, Amazon down 1.61, Google and Meta down. Google back below 240. If anybody, this was a couple weeks ago in Profit Panel, but I took a 350. I think it was a 240 to 245 bear call spread, and that's now showing some good profit. That would be 350 credit. It's probably trading for less than that right now. So Google, I think I did October 17th. I closed the trade out already, but a 240 and 245. I mean, it'd be up $1.20. If I was still in the trade, I'd take it. I closed out for $50. I had AVGO and I had Google for bear call spreads. This is better than nothing. So max risk was 150 and I'm up 120. It's almost 75, 80% return on capital or risk. Not awful. Okay. So heat map still a little bit boring for the day. No bright red, no bright green. Price is still very choppy for this morning. This is why I added the tab into the ATR tracker. We're still inside the 50% ATRs for the day. I do think that price is going to go somewhere, probably finding at least a 50% ATR, whether it's the upside or the downside. I don't care. I'm just trying to see if it goes somewhere. So let's float it out. This is real-time gamma liquidity. 50% ATR is around 66.85. Okay, and we're getting a gamma level here around 80. But it's lighting up either direction. There's a lot going on here. I'm telling you, there's some heavy jockeying behind the scenes on where prices can go for the day. What I'm hoping for is, market is choppy this morning. Give it the time for the afternoon, and then we have some flows later in the day. All we needed to go was somewhere. But if you're in for the standard daily profit play, it's working just fine. Right? In fact, 45 minutes in, did anybody take a standard daily profit play? James says, which masterclass would you suggest to learn more about the use of ATRs? Today's masterclass is fine, James. Coming into today's daily profit play, 1 p.m. Eastern time, I'll have a masterclass. We spent some time in the indicator yesterday. We'll talk about it more today. I'll show you what I'm doing with that ATR tracker on the spreadsheet. Okay, Larry, you did normal. How's it going? How wide were you able to go? I mean, the plus minus in the day was like 22 points. So did you go like 25 out, 30 out? Get a couple trades in? Okay, 12 to 13 delta, 125 out at 90. Vivek, nice. Good. That's good. Okay. Let's see here. 220 at 165. I mean, that's good, man. So 165. So 55. It's 25%er, dude. That looks pretty good in my book. 15 wide, 180 out at 145. Good, Brett. Not quite. 25 is not good enough, huh, Larry? I mean, it's looking good. Fresh highs for the year. Again, not bad. I took a screenshot yesterday, 589, 590, just inching up there a little bit. So I'd like to think that I can get, I don't know. I mean, if I get a chance to step on the gas a little bit, we get a run into Q4. then I'd love to see this thing creeping up towards like 650 to 700K for the year. I don't think I can goose this thing to a million, but if I can get, I think 7 to 750 would be an awesome run for the year. Okay, chart alarm just went off on Johnson and Johnson. I'm long Johnson and Johnson with shares, ratio, spreads, and puts. So this has been the healthcare play for me for a while. Just had a big correction. I was selling puts back here in the 140s and 130s. I got a DraftKings alert. It's down 7%. I mean, I don't think DraftKings is coming back to $10, but let's check this out really quickly fundamentally. If you have any stocks you ever want me to take a look at, just toss them out at me. I usually do this fundamental scanner. This is simply Wall Street. I subscribe to this. DraftKings, I'm curious what their fair market value is. I mean, gosh, it's crazy how below estimated values, earnings, price to sales, price to earnings, 3.9 price to sales. I mean, if any stock is over 10 times price to sales, that's a little sketchy. But fair value at 100, I might look at a trade here on old DraftKings, maybe $30. This might be a Project Options Edge trade. Let's find out. DraftKings. It's funny because like I don't have a single sports betting app. I've never placed a single like online sports betting. I just don't care. You know, I was I mean I was in so I live just north of Salt Lake City right now. I was in Ann Arbor before, and I can't tell you how like just to see tailgating and now see college football become what it is, just to see like pure money driven sports. And I'm not like the guy that's like, oh, they should do it for the love of the game. I'm so happy that athletes get paid. I have a nephew that's a senior in high school that's trying to get some basketball offers, and he's looking into NIL stuff. I mean, I want him to get paid going to college, of course. Why not? I didn't get paid squat when I was playing college sports. But for me to get like a $10 per diem and I could have Subway for the day, that was my win. But anyway, the DraftKings stuff, I think they're a household name. It's clearly a huge. I mean, there's so many competitors. I wonder, like, are they good enough and strong enough to sustain it? Are they a good play? I think that if we could see it below $30, I mean, I just hope that the world doesn't turn against trading, investing, and all of a sudden they're like, well, I can't afford to, like, for example, people lose their jobs, they stop betting. I don't know. Unfortunately, I feel like people use betting apps as like a Hail Mary. If they need something, they're just going to gamble. And obviously DraftKings makes some money on gamblers. Not like, oh, I open up an account and get a free $50 towards bets. I mean, if you have discipline, you shouldn't ever run out of money. But it's the gamblers. It's the same thing. Casinos are built on people losing money. So anyway, I don't know. Part of me from an ethical standpoint doesn't want to trade this at all. But I'm curious what a $30 ratio spread looks like. So bear with me. Let me walk through a trade here. Go Bears. That's fair. I mean, I'm a at-home Lions fan. I mean, being born and raised in Michigan, I'm a diehard Lions fan. Even through the bandwagoning the last couple of years, it's like, I've loved the Lions since I grew up with Barry Sanders back in the day when he was the only good thing on that team. That was Herman Moore, Pete Mitchell, Andre Ware. I mean, Kevin Kramer who was I'm thinking the quarterbacks' last names. And then our longtime field goal kicker that was just a stud for many, many years. He was like the leading Lions scorer was our field goal kicker. But the Lions have been exciting the last couple of years with what Campbell's been doing. It's been cool. Eric Kramer, there it is. Yeah, Eric Kramer. Kevin Kramer's a kid I played college golf with. Yeah, Eric Kramer back in the day. Anyway, I digress. So let's look at DraftKings maybe into end of the year. Can I get something for the 30s? No, that offers little to no premium. Can I get something into maybe a run up in May? A little bit better. 32 by 30. Not a bad trade. If I go an extra month, maybe I can get $1 for this thing. June of 2026, a 32 by 30. Okay, I'm going to take this trade, 32 by 30, So we have some pretty strong lows at 29. If I were to take any assignment, it would be below $30. I get a 250 bonus and the credit. Let me see if I can get this thing filled for $1.15. This is going into my margin accounts. I'll make this an official alert for Project Options Edge. And then, Dion, I'll start the session here just a moment for daily profit play. We got a masterclass at 1 p.m. So let me see if I can get filled here for $1.15. Getting filled. Okay, so getting filled. Oh, $1.29. All right. Even better. Let's go $1.29. Okay, let me see. I'm going to try to get greedy and go after like $1.30, 35. So that's not filling at $1.35. Let's take it down to $1.30 perhaps. $1.30 is getting filled. Good. All right, so I'm going to take this trade for $1.30. This is going to be on my margin accounts. Okay. All right, just give me a couple more. So I'll make this official for my Project Options Edge. This is a new trade on DraftKings. So I have a few more accounts to toss this into. And I'll sprinkle this out as a bonus if you want it. If you're not in Project Options Edge, I'll give you a freebie today if you want it, since I'm taking it here. 3521. Did not fill. Okay, so trade is in. Okay, so I'll build the trade out. It's a 32 by 30 for June. This is out a while. I'll build this trade out for you. So option strat, build out a ratio spread. This is DKNG DraftKings going out to June. I'm buying the 32, selling the 30, pulling in credit. Here's what the trade looks like. So there's risk, but I would take the assignment. I'm willing to own the shares. Anytime I'm doing a ratio spread, I'm willing to own the shares. Price right now is trading at $38. So the assignment would be, if price drops down to $30, I get a $2.50 bonus profit, and the $1.30 on top of that, I'd own shares at $26.20. Okay. So you're going to see me post this officially in Project Options Edge right here. So new trade. DKNG 6/18/26 expiration. Buy the 32 put with one contract, sell the 30 put with two contracts, $1.30 credit. I'm willing to own shares of DKNG if price is less than 30 by expiration. Break-even price is $26.20. So 30 assignment from $30 assignment less the $2.50 profit trap less the $1.30 credit. Make sure those numbers are right. So assigned at 30 minus $2.50 minus $1.30, $26.20. That's correct. Okay. If DKNG is greater than 32 by expiration, keep full $1.30 credit. If this trade is showing 20 cents debit or lower, we'll look to protect profits. So if I get $1.10 out of $1.30, so $1.10 out of $1.30, that's 85%. If I'm doing ratio spreads or anything that's like, kind of naked put related, anything over 80 to 85% for profit. Okay. So that's going into Project Options Edge. So I'll add this into the tracker. Okay, trades in. It depends. I mean, if price is going to, I mean, price right now is trading at 38. So ideally, what you want to see this trade do is if price, let's say price comes down to the lows. Okay, well, we're going to take on some risk because that $30 put is a naked put. So there's risk there. If we drop below $30, that's not great. We do have potential assignment risk if price is going to be below 30. But I'm also looking at there's pretty good support. There's pretty good support. If this is a range, what you'd like to see this thing do is just find a way to go up, right? We're coming into baseball season. We're coming into football season. I would think that betting is going to be as good as it's going to be for the next, 17 weeks in the NFL through the Super Bowl. So even if this is going to go up to 45 or $50, then that's what we want. If price goes up, then our $1.30 is going to be benefiting from time decay. And once we get to about the halfway point, this trade, if price is higher, we could see this thing trading at like maybe 50 cents. So if you want to take the profit there, that's great. I don't mind taking like a 30-cent debit either. Just grabbing $100 out of this trade, max profit be $1.30. So if I don't have to own the shares, I don't want to own the shares. That's why if I'm putting on the trade, my break even would be $26, which would be down here. Technically speaking, we shouldn't really get to $26, or if we are, I would flip it and repair it with covered calls and try to flip it for maybe $300 to $500. Yeah, that's possible, Tim. But Kalshi and Polymarket, I mean, they're not necessarily publicly traded. So anyway, we'll see. I mean, I think there's like right now, it's like we're kind of in the season where if there's household recognition or brand recognition with DraftKings, it's at least it's publicly traded. We'll see. But it's a trade, and it's just a trade. So go from there. Eddie Murray, there it is. Eddie Murray, Lions kicker. Cool. Okay. Let's do this. We're still waiting to see if price will get out of the dead zone for the day. Price action for today has been choppy. Larry, I'm assuming that you're out of your trade right now. You had to get an extra maybe 5 or 10%. Yeah. Waiting an extra 15 minutes. Price has gone literally nowhere. So I am hoping for price to be not a dud today on a Tuesday and a month and a quarter. I'd like to see price to go somewhere by the end of the day. And if so, let's get out of this dead zone. Let's see if price can come after, any ATR level or any gamma level. Do we bounce off 40? I mean, if it is a pure like sideways day for 15, 20 points, that would be a little disappointing, but I'll manage. I mean, if I take a small loss on the reverse iron condor, that's fine. But I don't know. I'm kind of willing to hang in there to see if the market does something silly for end of the day. 66.80, we get paid. Sub 66.40, we're obviously open space. I think we get paid. So I just want to see if it gets out of this box. Okay. For daily profit play, I have a masterclass today at 1 p.m. Eastern time. I'm going to pivot over and start talking about it very quickly here for a few minutes. Okay. We had a nice turnout yesterday. We had about 50 members in the class. Today, what the goal is we're going to review some notes. We're going to spend a lot of time on broken wing butterflies today. I'll spend some time on the VIX box and ATR indicator as well. How I'm looking to add that tracker piece to the course, because I want to see how often we can get just prices staying inside the 50% ATR. This is my indicator. If we stay inside this 50% ATR, that's great. And that's usually what the market's going to do. Even gaps higher, lower. If we're up above the 50%, I mean, trade the 100, trade the 150. It's just nice to know every single day you can approach the market with a high probability call level and put level to get paid. And then you set your parameters where I don't want to take in garbage credit. I want to take in something reasonable. Like if I'm going to do a 5 wide spread, I want at least $1 credit, but probability of profit is pretty good. Okay. So let's run through this together. class today at 1 p.m. Eastern time. I'd love to see y'all there. 89% win rate with the average return of 14+% over the same day. A lot of these are 0 DTE trades. In trading, we obviously aren't undefeated. I would say, to be humble, I'm a pretty